DeFi Slate team.
What's up, y'all? Real quick, if you like the DeFi Slate content on Twitter and YouTube and Substack, please give us a like and a subscribe on this video on YouTube. Join our channel, join the community. We'd really appreciate it. We're pumping this stuff out for y'all as much as we can, and we really enjoy the support and the community that we've built. Thank you very much and enjoy.
What's going on, guys? Welcome to episode 36 of the DeFi by Design podcast. Today is a Moon Boy day with the ETH and DeFi markets going nuts. A whole bunch of cool stuff going on in DeFi right now. Actually, just as we're speaking, there's a little bug on the Aave platform, and it was showing this AML rule where, your wallet was blacklisted, blah, 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 blah. And, there was a bunch of flack on Twitter. And then all of a sudden, 𝗍𝗏 responds to this and says how the reason this is showing up is because there are institutions who are practicing how to do DeFi before they ape in. So good news going on everywhere, guys. We're here today with Harrap. George is a DeFi OG for sure. He's been around the block in crypto, working on all sorts of different blockchains and projects. And we're just going to talk about kind of what's going on in this cross-chain world of DeFi, what we're building, and kind of what we expect to see happen in 2021 in this cross-chain world. I'll toss it over to Robbie. Hi, how you doing, Robbie? Good afternoon. It's a beautiful Wednesday.
It is a beautiful Wednesday. It is May 12th, 2021. So markets are looking very, very green. As Andy said, everything is pretty much up. DeFi, that rotation is certainly sparking. So we've talked a lot about the DeFi flywheel, and we might get into that some today, but that's kind of the perspective on the markets is as ETH is going up, that money is now rotating into these DeFi blue chip coins. And, people are either practicing with DeFi or they're really getting involved with it and digging deep. But we're going to talk a lot more about DeFi today with George, how he got into DeFi, kind of what he's exploring now, what tends to hold his interest. Everything that he's doing with Step and YAP. So I will pass it over to George. How's it going today, George? What is going on?
Oh, it's going great. Good to be here, guys. What's happening with the markets at the moment with DeFi? You got ETH pumping, we've got Aave with AML stuff. Literally, I had a conversation with 𝗍𝗏 about this like months ago, where I was like, okay, you guys getting a license in the UK, is this going to interfere with what's happening in the DAO? And it was like, no, nothing, will interfere there. So, I mean, that's good. I haven't checked what was said, but I do hope that certainly DAOs remain DAOs, and if institutions have problems dealing with it, well, that's their problem. It's not the DAO's problem. That's my general thesis on things.
Yeah, and there's actually been some recent legislation in the U.S. in Wyoming, which has kind of recognized DAOs as their own legal entity. So I'm not sure if UK has like a similar legal framework, but in Wyoming, you can now register a DAO, as far as I understand, and you don't need like an accompanying LLC or corporation to go along with that DAO.
Yeah, I had a conversation with some people a while back about that, or like a couple of weeks ago when news first came out. Like, I don't know what the purpose of that is. Like, okay, so you register your DAO, and then something happens in the DAO, and then what? You're going to bring it to a judge, and then the judge is going to bang the gavel and go, okay, something needs to happen because I said so. And then you'll be like, well, sorry, bro, we're just a DAO. It's just a multi-sig. I don't control it. We can't actually influence the contract, perhaps. So I don't like, I think DAOs should remain DAOs. And if you want an LLC, then make an LLC. I don't quite know. I mean, maybe I'm missing it. I haven't investigated the legislation. I mean, hey, maybe it's good, but yeah, I think that there's certainly like some investors as well out there who are like, look, we're publicly known as part of these DAOs, and in order to limit liability, we would prefer that you know, it's not us personally as part of these DAOs on the multi-sig, it's like some entity. So maybe this is a way for them to engage in that ecosystem. And okay, but I just think enforceability is such a core thing that if you're making rules that aren't enforceable, then why are you making them in the first place? That would be my thoughts there.
Yeah. Yeah. Like if right, like I mean that gets down to it. Enforceability, like the judge banging his gavel, really can't do much at a smart contract level. And you brought up kind of like why someone or why an entity might do that to begin with, to try to, I guess, remove some personal liability from any of the smart contract bugs, or a hack, or just a way to be recognized as part of a central entity to a DAO. Which is super cool. And I was kind of I guess a similar perspective. How do DAOs kind of basically everyone's looking for regulation or asking about regulation, and my question is kind of how it's even possible to regulate these DAOs. And you touched on it a little bit. The enforceability just isn't there. But for tax purposes, or for agreements off chain, it certainly seems like there should be a legal entity that can engage in these kinds of agreements, that isn't just cemented in smart contract. Maybe that takes away a bit from decentralization, but I do think it's useful to have some sort of entity that can act as the central part of a DAO, and then kind of branch out and decentralize from there. I'm not sure if that's like a shared opinion across like kind of the decentralization maximalists. But my understanding of decentralization has taken on kind of a new change as we've seen how more and more projects can provide something useful and provide value to the ecosystem, but not have a completely decentralized team. And I think Binance Smart Chain is a good example of that.
Yeah, I think decentralization, I used to think was a binary thing. I do agree that decentralization itself is probably on a spectrum, because I mean, you could go into the nitty gritty and you can go, okay, give us an example of a decentralized system, right? And then people go, oh, proof of work blockchains, Bitcoin and Ethereum. Okay, cool. Well, there's been many times in my lifetime that 51% of the hash rate was owned by one entity in Bitcoin. There was a thing called gigahash.io back in the day, and they had 51% for like a couple of weeks, and they actually had to spin up a bunch of fake pools that weren't really the main pool, as to satiate people that it wasn't all in the control in one pool, when it's like, well, really, you're pulling the strings behind multiple pools. It doesn't matter. The same is kind of true now when you have a couple of mining entities and proof of work, which if they were to collude, if government were to put a gun to someone's head, then, hey, maybe they could collude, right? So I think the decentralization kind of discussion, it gets lost a lot, and people, people get very passionate about it, but ultimately there's probably multiple ways to look at it. It can be interpreted in different ways, and it probably means that decentralization itself is not binary. It's not like this is decentralized and that is not decentralized. It's like, well, this is probably more decentralized than that. And I think certainly you want to, as an L1 chain should be going for greater decentralization. And there's probably a couple of reasons for that, but ultimately it's up to the people who are building the cool apps on these chains to go and do that. It's not really up to the L1 chain itself to go and build different apps. So you just want a neutral layer, which doesn't take sides in anything, and that's what people can build on. That's what a protocol is essentially. So I think that's a necessity. You mentioned regulation as well. I mean, here's my take on regulation. I dealt with for the last 10 years, I've been talking to various people in different regulation, IMF, central banks. I was in a room pitching stable coins to central banks like 6 years ago. A bunch of them laughed at me. They said that's never going to happen. Now look what's happening. They're all coming up with their own CBDCs. So yeah, I mean, I think these regulation is something that people talk about because it's a topic without an answer. So you can go on a panel at a conference and go, but you see, the problem is regulation. And then you can just make up some like interpretation of what you think. And then that's like a valid answer, because it's not like a computer engineering problem when there's like generally one answer and that's the answer. Whereas regulation, there is no answer, because it depends on whose patch of dirt you're talking about. Are we talking about US regulation? What about Zimbabwe? Maybe they have an opinion on crypto. Like, why don't we follow their rules? What about China? What about Thailand? Why are we picking one patch of dirt as opposed to another? What, just because you live there? Is that a valid, moral premise for DAOs to adhere to? Like, because a bunch of people live in some place, therefore we should adhere to that law. Like, well, I don't live there, so I don't want to adhere to that law, and nor should I, nor that's not how the world works. So anyway, I think regulation is something that, it doesn't really have an answer. It's probably pertinent to people that have to interact with governments in their own jurisdiction. So I think where it comes down to is that DAOs themselves, I think, should be neutral. They should stay neutral, and they should just be out there in the cosmos executing their transactions on a smart contract. And if anyone has problems related to regulation, well, that's that particular person's problem who lives in a particular country and jurisdiction. And I think that's the sensible way to deal with it, because that's how we deal with a lot of things in the world. Just because you have a website in one country, it doesn't mean that you're subject to the regulations of some other country just because you have a website and it's accessible. So I think it's probably best to be left up to the individuals to manage their individual issues they might have with regulation, and that's fine. That's great. And I implore places like Wyoming that seem to be friendly with crypto to keep at it. And I think that's a good thing for people that live in that location. So
Yeah, I think that's ultimately what a lot of the building premises that are on DeFi right now. I mean, that was one of the things that attracted me, and I think a lot of others to the community, is that ability to kind of be borderless with respect to all sorts of commerce that's happening online. I mean, that's these ideologies that we speak of are kind of a shift in thinking that has come with the openness of the internet, and kind of this idea of global unity and transactions happening on the global economic scale more than ever. And so it kind of forces you to think about what rules and what is in place currently that is, prohibiting, I would say, any sort of further economic growth, which can be bad, but in DeFi's case, we like to think that what we're doing here is building a better future for everybody, right? But the point is, these rules are a bit is it antiquated or antiquated? They're antique rules, right? They are meant for times of dealing with notes and checks and handbooks and banks and tellers. And as these things change, we are kind of forced to adapt to what is in the now, which what is in the now is a global open world, right? And so that's kind of what we have with the internet and Web 2, and then now with Web 3, with all this online commerce and crypto and DeFi, right? We're even further forced into this realm of borderlessness, which honestly excites me, because I think that there's a lot of good possibilities that can come with kind of a world unity, more so than like old kind of rules with states and all sorts of governments and all that. So all this being said, George, I'd like to pose a question to you, which is, what is the worst thing that you could see happen to DeFi in terms of regulation, right? So if a government entity or some sort of financial entity came out with a regulation on DeFi, what would be the worst thing that you could see happen? I know it's a tough one to kind of put a hypothetical out there, but curious to kind of hear what you say there.
Yeah. So I think a lot of these, like, governments will do it. They will come out with laws, and they don't need reasons for the laws that are logical or anything. They'll just go and do it. And many countries will do it right, and many countries will do it wrong. I guess the question is, what's right and wrong? I think in the case of DeFi, you'll probably see that governments might not like people being able to transact freely with each other, because we we have laws around the world for things like currency controls and all sorts of different things. In Argentina, you're not allowed to use PayPal or own US dollars. In China, you're not allowed to wire transfer above 50K. There's lots of different weird rules around the world that if governments do wake up, and they eventually will, and they realize that people are transacting freely, they might not like it, and they'll go make some rules. I think a lot of the rules, the worst that it could be is something like, oh, we're just going to ban everyone that does it, or make it illegal. And that's probably what they'll do. But the point is, again, on enforceability, if you have this open system, which anyone can interact with, and nobody can reach in and take your private keys and force you to do something, then you can make all of the rules you want, but it doesn't mean that it's enforceable in any way. And because, everyone's sort of pseudonymous, and you can make a brand new address, anytime you want, it's very hard to say that, oh, this address equals George's address. And that's it right there, because it's just it's just a bunch of numbers and letters, right? There's no central database. There's no ability to, force that address to do something. So yeah, I think that there will be laws that come which are not helpful. Some governments will come out with them, but there will also be people that see the opportunities. And there will be governments around the world that are, and I've actually spoken to some of these at different conferences over the years of different smaller countries that are like, look, we're a small country, we have a small GDP, we want people to come to our country and we want to get rich. And it's kind of like, okay, well, you should make it easy for all of the entrepreneurs out there that are building stuff in this decentralized world. Make it easy to come to your country. They can come here, they can invest money, they can set up a team, they can have an office space, they can buy a flat, they can, buy food and whatever. Like, they're investing money into the economy. So there will be places which will go the other way and will want to embrace this kind of thinking. So I think it's great. There's pros and cons. Some places will get it right, where they'll make it more restrictive or problematic. And then some places will go, hey, we want all of these businesses to come here, all these people, these entrepreneurs. We're going to make it easy, whatever that means. I don't know, but it makes sense to try and do that and try and attract a lot of these crypto companies.
Yeah, and we're kind of seeing that with Miami. I think is a great example of that. Not really one of these smaller countries, but a city within a bigger country that, again, is trying to attract more and more entrepreneurs, founders of companies, specifically in crypto, to try to just really throttle the innovation and development at a central level, at a local level. And I think that is important. Just, getting all the way back to the conversation that we started with around regulation. Like you said, the problem with regulation is one that a person might have with their own local government, at whichever level. And I think Miami is starting to show, like, okay, we're friendly. We don't want to put kind of that like shade over your face of like dark regulation. And some of the smaller countries are, like you said, doing that as well, to try to really get people to move there and innovate there. So the regulation seems to be the best way to signal to the entire community, like, hey, we're friendly towards crypto. Come here, develop and raise your products here. And I kind of getting back to something that Andy said about this global unity concept. I think that's really important as we kind of shift to like a collaborative mindset rather than a competitive one. And crypto is really fueling that paradigm shift. And I think as we see more and more friendly local communities kind of signal that they're open for business when it comes to crypto, we'll see those communities start to collaborate with each other. And maybe we can get some more real world applications, some more business applications that, can kind of push mainstream adoption even further. I'm not sure exactly what those might look like, but as Miami starts to collaborate with Zimbabwe and Wyoming, I think there could be some really interesting pairings on how we see blockchain and crypto used in the real world.
Yeah, I mean, ultimately, the places that get it right will do very well from it, and the places that get it wrong will lose money in investment, right? So over time, it's a losing trade to like try and limit things, because what will happen is that people will leave a particular place and they'll go to another place, and that other place will do very well. They'll make a bunch of money. They'll have people employment and so on, and the other place won't. So I think the hand will be forced at some stage whereby crypto is not going away. Some places will get it right, and it continues to boom, and they're doing really well from it. So the people that are limiting things, might go, hey, maybe we should be like that. Maybe we should be opening, and maybe we can get some of that money and we can do well as well. So yeah, I think ultimately, the decentralized movement will win out, but there's going to be some turbulence on the waters, before we get there.
Yeah, I'm kind of curious what you think about the current state of wealth inequality in America and I guess the world, but like also more relevant to our listeners is like, how do we feel about this new era of crypto elite, right? Like if you think about it now, there are more millionaires and perhaps billionaires from crypto than ever before in the world, and I think that the trend is going to keep in that direction. And here we are with this world of COVID and people losing their jobs and inflation and all this stuff's happening. But we've got a bunch of these crypto degens who, like us, are trying to add DeFi to the world, but basically you're at the right place at the right time. And all of a sudden you've got people that are, just on top of large sums of money and almost making up a new class of wealth. Like, I'm curious what you think about how this wealth is going to be distributed into the world, kind of what some advice is for anybody who's listening who has been doing very well in crypto. And I mean, just overall, like what you see as the impacts and the residual effects of kind of this new upbringing of crypto wealth happening.
Yeah, there's a good saying I like on this one. I can't remember if it was, so there was an Eastern philosopher called, I think, Lao Tzu, or it was Confucius. And they said, or one of them said, the biggest inequality is to try to make unequal things equal. And I think that's really important to understand. So like with the growth of crypto and people getting rich and these sorts of things, that's great. We want more of that, and we want to lift everyone up rather than use a hammer to hammer some people down. Because I think what we all want is we want everyone to be uplifted and to get richer. And what that means is maybe they can pay for different things in their life or improve their socioeconomic circumstance or something like that. It is a pathway to having greater freedom, I think. So I think ultimately, like, you can have equality. South Sudan has equality. Everyone's equally poor. That's not, equality is not the goal. The goal is freedom. So what you want is you want to have maximize freedom, maximize the ability for anyone to be able to go and start anything that they want in, say, the crypto world or something like that. And DeFi, I think, is a good example of that. Is you have all of these financial applications where you got lending protocols and people giving loans. Like, imagine trying to do that in the real world. You can't even turn up to that discussion without $50 million in your pocket to buy a lending license. And even then, you've got to have all of these different things. Whereas you can spin up that in DeFi like in a day. So I think it's very liberating, and I think that's great, and it enhances freedom around the world. And certainly for people around the world that might not have the ability to do that, they can now do it in a way more cost-efficient way, a way more scalable way, and that just opens up more opportunities, and more opportunities equals good. So yeah, that's what I think.
So you see it kind of more as a freedom for just the entire world, if you will. Like, of course there's people that have made a lot of money from crypto up to this point. There's going to be a lot of people who make and lose the money, right? But regardless of all of this talk about equality, the goal, ultimately is freedom. And I think crypto gives you kind of that choice out, of the current, which is the ultimate freedom. And yeah, I mean, it's just interesting in these times right now where it feels like that wealth gap is ever growing. Sometimes you can feel a little bit guilty as far as how easy you've been doing, and how well you've been able to, you know, keep your business going and yourself because of crypto in a huge bull market, you know, when a lot of the world is struggling. And perhaps I'm projecting a bit here, but, you know, sometimes there is some guilt that hits. It's like, wow, like we just got kind of lucky and boom, right? And so, you know, at the end of the day, I align with your thesis as far as where the freedom lies. And yeah, I mean, the best part about it is, you know, we started in DeFi early, you know, earlier than most. But the thing is, it's not like we had any more of an opportunity than anybody else. Sure, other people started with more cash or less cash or more knowledge or less knowledge. But I think to your point about the freedom is anybody can get in here and do these things. And I mean, that in of itself is as liberating as it can be.
Yeah, I mean, you've got a level playing field now, right? So before you didn't have a level playing field. Right now, you can go and make a whole new DeFi project just with a laptop. That's all you need. You don't need a $50 million license and a stamp from a government and 10 people working in compliance and 2 years waiting for this and that. You can just go and do it. So I think that, you know, that in and of itself is great. And also when we're talking about, you know, people getting richer or something like that, think of it this way, like it's kind of more people now have access to the level of wealth, which was perhaps contained with fewer people previously. So previously, like I said, you had to have a banking license or something like that in order to be a bank or to be able to send transfers, right? So there was a very small number of people in the world that could ever achieve anything like that. Whereas now it's a much bigger and open playing field for anyone. So really the wealth that you're seeing is kind of just being unleashed from what was previously locked, you know, behind these gates and these gatekeepers. And these gatekeepers can no longer, you know, it's kind of like a dam that's breaking. You know, they can't really keep it in anymore. You know, this DeFi thing, this crypto thing, it's going to continue to grow. And more people around the world are going to experience some of this wealth, which perhaps, you know, with central banks printing money willy-nilly and giving it to, you know, other banks at 0% rates, like, well, how come everyone is paying 18% on their credit card? So can we have some of that? Like, so I think, yeah, it's unleashing a lot of the stored economic value, which is great for the world. So yeah.
Yeah, and I mean, I've seen this, whether it's the efficient market hypothesis or just kind of a phenomenon in crypto markets. We continue to see inefficiencies exploited, and the banks and the intermediaries for lending and borrowing were a huge inefficiency. And now kind of the innovation of crypto has led to a more efficient market, and capital is able to flow more freely, you know, between lenders and borrowers, and it's not locked behind the bank's walls, like you're saying. You know, I think this is great, like talking about kind of you know, philosophy behind each of our perspectives and crypto as a whole. But I realize that we haven't really gotten into your story, George, and kind of how you got into crypto and what enthralled you about DeFi specifically, and then kind of how you navigated what was out there, and ultimately found, you know, your niche in DeFi and Step. Can you kind of give us, you know, the elevator pitch on your story and kind of how your journey has led you here?
Yeah, sure. So I've been in crypto for over 10 years now. And back in, well, when I was early 20s, I think 21, 22, I was a student in Australia, had no money. I was working in a supermarket. I was doing my degree at the side. By the way, never finished my degree. But by this, I heard about this thing on the internet. I had I liked electronics engineering. I was studying electronics engineering at the time. I liked that, and I was sort of dabbling with computers and graphics cards and overclocking and that sort of thing. Anyway, I saw on one of these, you know, computer forums, hey, you know, you can make money with your computer hardware. How that sounds good. Mining, what's that? So in 2011, there I got into mining, and basically I was buying graphics cards off eBay and then just building them in my room to mine Bitcoin. And it kind of doubled as a heater. So it was kind of like a heater, which made money, and that's the best kind of heater you want, right? So, so yeah, so that was good. And from there, I just sort of, I didn't know anything about finance, right? Finance was this topic that you hear about on the news that sounded kind of boring, and I just had no sort of interest in it. But from Bitcoin, I was able to learn about sort of what is money, where does it come from, how does it work, all of these different things through the various schools of thought that were involved in Bitcoin at the time. So yeah, from that, I was one of the first to get a FPGA, miners. FPGA miners were like the next step up from GPUs. I was the first batch of ASICs as well. There was a company in Kansas City which made these ASICs, and I hadn't really made too much money, but I went to the bank and I got a loan that I couldn't afford. So at the time, I went and got like a 25K Australian dollar loan, and that was like the max that I could get them to give me. And it was at some crazy interest rate, like 18% or 20% or something. But I'm like, hey, I'm going to get this loan and I'm going to just make sure that I'm in the first batch of these miners, and I'm going to do it. And then eventually, it was delayed 6 months. I ended up flying to Kansas City to see this company. You might remember them or heard about them, 𝗵𝗶𝗴𝗵 Labs, and to go and see if it's legit or not. I went there. It seemed pretty legit at the time. I met the team. They took me around. So anyway, it was good, and I learned a lot. And luckily, the miner did come, and it did very well for a while. But after that, I was doing crypto and trading on the side for quite a few years in my job, which was working for a mining company. 2014, decided to quit my job, moved to Hong Kong. I decided Hong Kong's where it's at. A lot of finance stuff happening there, and they seem very welcome to entrepreneurs. Co-founded a company with a friend there, and we started the first Bitcoin remittance company in the world. And that's sort of where if you Google me, you'll find a whole bunch of stuff talking about remittance, right? So I've sort of done that 6 different countries, based in Hong Kong there, and that was a good part of life and learning. But in 2020, when COVID hit and all these things happened, we decided to close the business because basically all of our customers had to close themselves. So we were providing physical cash shops the ability to exchange crypto, cash in, cash out, but pretty much all shops were closed for most of the year in Hong Kong. So we decided to close the business, return the money to shareholders, and go on to the next thing. And that's where I really got interested in DeFi. Probably 2019, 2018, I was dabbling a little bit with DeFi.
George,
but
it says here in this headline that you were as interested in DeFi as your first ever Bitcoin being mined.
Yeah, it does. And it's true, 100%. So when last year, when DeFi really started to take off, I was like, wow, this thing is awesome. Like, you mean I can pay my rent by taking a loan, which I'm paid to take, and then basically I'm getting paid to pay my rent? Like, that's insane. So yeah, it was a really exciting time. And I was just sort of, doing things myself personally, when lockdown hit and everyone's sort of at home doing stuff like most of us were in DeFi summer. But sort of at the end of 2020, I sort of got together a couple of friends of mine who I'd known again for quite a while and been in crypto for a while, and we're like, hey, let's do like a DCA contract on Ethereum. DCA is in dollar cost averaging, right? So you put some money in a contract and then it goes and buys Ethereum for you every day or every week or every month or whatever time schedule you set it. The problem was that doing that on Ethereum at $1,500, 𝗀 at 50, it was going to be $180 if you per transaction if you just had 6 users. So that's insane, right? And now we're at $4,000 Ethereum and like 300 𝗀, right? So forget it. It's probably like $1,000 a transaction now for 6 people. So you couldn't build anything scalable like a DCA contract. And that's probably why there just hasn't been one on Ethereum yet. We looked at the side chains, right? XDAI and Matic. They didn't have the liquidity, start of this year. So we built out a prototype there as well for this DCA thing. We started looking at, okay, people want to buy these DeFi coins. If you can't do it on Ethereum and you can't do it on side chains, then how are you going to do it? And that's where sort of Solana came up. And Solana has a lot of these wrapped DeFi coins. You got your YFI, you got your 𝗲𝗏, CRV, everything that's listed on FTX, basically. It's all there on Solana. You can buy it. It costs literally nothing. and you can deploy a contract to do exactly that. So we entered a hackathon. That was earlier this year. That was with Step Finance. The initial iteration was just a DCA contract. Went great. But you know what? Like, we found at the end of the hackathon that, well, we could just be another platform out there that's like, hey guys, come use our product. It's cool. Well, trust me. And then you're just promoting this DCA thing. The problem was that Solana lacked a central place to bring everything together, right? Ethereum has a few dashboards, right? You got your Zapper, Zerion, DBank. There's a couple of these ones, right, where they integrate a lot of projects, bring it all together on a dashboard. Maybe they have some value adds like swaps, or they can help you yield farm or whatever. But like, that didn't exist on Solana. So we pivoted at that stage to go and build that. And that's what Step has become. It's been this portfolio manager, this place to aggregate transactions across the entire Solana ecosystem. And we really think that DeFi, the multi-chain world, is here. Everything will be multi-chain in the future. It's not going to be a binary thing. It's only going to be this chain or only that chain. There will be other chains, just like there's thousands of coins, and many of those chains will do DeFi. And we think that Solana is well placed to capture a lot of that growth. DeFi last year was at 1 billion TVL, and now we're way over 100 billion TVL. So I think that's just going to continue to grow, and maybe 40% of that might end up on Solana at the end of the day. So yeah, we're really excited at being this one location that brings everything together. We have a bunch of value add stuff thrown in there that just makes people's lives easier. And we went through the demo as well, yield farming and so on. So that's what we want to do. That's what we want to be. That's sort of how I got here.
Great. Yeah, I mean, you hit on a lot of stuff, and kind of how your own journey has taken you all the way through Bitcoin when it started with mining, through to Ethereum when you discovered DeFi, and then now, after realizing some of the limitations of DeFi on Ethereum, DeFi on Solana, which, for our listeners who maybe haven't used Solana but Ethereum just a bit, Solana it has much more throughput, which means that the network is less congested, and it takes a lot more transactions to get congested. And you're looking at gas fees that, what I've heard, are about 1,000 times cheaper, and transactions that take only a second to a minute, rather than sometimes a few hours to confirm. So the throughput of Solana is much higher, and can handle a lot more transactions per second, which gives it some more utility. So we're seeing, a lot of different protocols on Ethereum get kind of bogged down by the different, protocols really exploding in volume. And it's a good problem to have, because these protocols are seeing so much activity that it can't really, it almost can't handle how much demand is flowing through these systems. And that's where other layer ones come in. So platforms like Solana or Binance. Well, Binance Smart Chain is kind of a different animal, because it does run on Ethereum. But layer ones like Solana can kind of silo a lot of this liquidity and a lot of these transactions that might have been happening on Ethereum, but have more concentrated protocols for Solana specifically. So I'm curious, and this has kind of been echoed in our chat, especially recently with all the development of layer twos, kind of what the future looks like for you and your understanding of DeFi, and the narratives that are taking shape in DeFi right now. How do you think these narratives are going to evolve around transaction fees? Even if ETH 2.0 goes off without a hitch, how will that impact the ecosystem, and how might we see layer twos kind of throttle the Ethereum ecosystem, and what impact that might have on other layer ones?
Yeah, I mean, they're all good questions, right? So I think that the basic premise is that DeFi will continue to grow. Okay, cool. Now, if it does that, how are we going to scale the system? Right now, Ethereum, it doesn't have ETH2 deployed yet in, proof of stake and all this kind of stuff. It will at some stage in the future. That's great. But right now, the realities are that, I went to 𝗵𝗵𝗃𝗃 yesterday, or was it today? I can't remember, to do a swap. It was $50 to approve that swap, and then it was $176 to actually go and do it. So the problem is that, you're never going to be able to attract new people to the system if your buy-in's like $220 to just swap something. And what if you're only swapping like $200, right? So it's completely unviable in its current state to be able to do that. Now, there are a number of solutions, right? And we can look at them, right? So you've got other L1s like Solana, like BSC, like anything else that will come along. I think they will be always there. And new people, new retail, like they don't want to pay $200 to swap. So they're just going to go to the location which allows them to be able to do that. So I think a lot of what you're seeing right now with new people to the crypto world, I made a comment on Twitter actually, like last week, I think, was that actually a lot of people are coming to Solana that have never used Ethereum. And a lot of people are being like, what's Uniswap? What's Curve? What's YFI? Never heard of that. All I know is Pancake or Solana, right? So people are coming to it from the perspective of they've never actually interacted with the expensive system. And that's fascinating to see, because it means that this narrative of fees are preventing people from transacting is real. And it is making a definite impact on these other L1s. So I think, number one, you'll see these other L1s continue to grow and get traction, and more stuff will happen there. And then once that happens, like, do you need to go back to Ethereum? That's the question, right? Is that once all of these other L1s have everything that Ethereum has, currently they're still sort of building out their communities. It's still kind of new, but once it does, like, what's the incentive? Like, if I can go and get a loan on some other platform, well, why would I bother going back to using MetaMask and, Ethereum and all that kind of stuff? So that's one question. I don't know the answer to that. But then you've got ETH2 and you've got L2s as well. So layer 2s on Ethereum. Are they going to solve the problems? Are they going to bring people back to Ethereum? Are they going to smash all of these other L1s that are taking all of these users? I don't think so. The reason is that, well, firstly, L2s, right? L2s we've had on Ethereum for a while. They haven't really garnered too much traction. Like, I was an early advocate of Loopring. I was telling everyone to buy it at 5 cents or whatever. Loopring does a great job on Ethereum. They're a DEX and they're on an L2, a ZK rollup, and that's great. But you haven't seen a massive adoption of them just yet, because they're kind of walled gardens, right? One L2 is not really interoperable with another. And in order to make them interoperable, you have all of these different proxies and weird different things that you have to do. You either have like a middleman in between the contracts, or maybe the contracts need to implement some sort of technical solution so they can talk to each other. So like you might have, Uniswap or 𝗪𝗪 or something on an L2 on Ethereum, and maybe it's super fast, but nothing else can really talk to that contract unless it first has to get into that L2, walled garden. So I think that's going to be a problem. And we'll sort of see how that plays out. Now, maybe, Ethereum 2 will help a lot with the scalability issues. I'm sure it will. It certainly increases throughput. You'll see fees drop really low. But the question is then, okay, cool. Are people going to flow back to Ethereum? That's kind of where the genesis of a lot of these DeFi stuff first happened, was on Ethereum. That's why we talk about it. I don't know. I don't think so. I don't see that there's like going to be some massive draw card if everything exists everywhere else. So I think I talk about the multi-chain future a little bit. And what I see it like is kind of like medieval cities. So medieval cities back in the day, you had the Dark Ages, right? In quotation marks. That was where nobody really traded with each other, and everyone was kind of insular, and you had the king in their castle and they were in their castle, and that was it. And all of the serfs had to go and, work the lands and pay the king. But eventually you had the Renaissance that led to the Industrial Revolution and so on. And you had the Age of Discovery and explorers. You actually, what happened was that you had new technologies arise, which enabled people to connect with each other and trade with each other. And you saw that there was lots of different trade cities popping up around the world, like Venice, or Portugal in 1500s. lots of trading nations set up, and that benefited them greatly. So I see the same thing with the multi-chain world, whereby currently we're kind of walled off in these different ecosystems. And what will actually bring a massive flourishing in liquidity, in use cases, in everything, will be when you can link a lot of these blockchains together and transact across them. Like if you could share liquidity pools, not only across contracts, but across blockchains, that would unlock a lot of cool stuff. Like what if you could transact on Solana, but use the liquidity from Ethereum or BSC or something like that? Wow, that'd be amazing. Now you've just opened up billions of more dollars of cool new things which people can use. So that's how I kind of see things playing out. Is there will be this tendency to DeFi will grow. There will be a lot of these chains. There will be a lot of solutions, but ultimately interoperability is the important thing. And that's what's going to really see a flourishing in this whole ecosystem and massive continued growth.
Yeah, that was the big thing about a lot of these, all the rollups, and then the EVM compatible versus EVM non-compatible chains. Was basically Ethereum is like the home base for everything. All transactions, all DeFi, and then you've got all these other layers, as you're explaining, that are basically working as best as they can to be composable with Ethereum. Because if they're not composable with Ethereum, then it's going to be very tough for them to basically attract any of the network share. Now, I do totally agree and understand that people are going to join, say, a new chain like AVAX or Solana without using Ethereum. But I think for the majority, a lot of people know and use Ethereum or Binance Smart Chain or some sort of an EVM compatible chain as their home base. So what we end up getting is all these different layers and side chains and roll-up solutions that all kind of go into basically taking the congestion out of Ethereum and putting it elsewhere, which in of itself basically just creates Ethereum as a stronger chain, as one of being able to kind of have all these other bridges to all these other different kind of cities, as you're saying, all kind of leads back to Ethereum, which is definitely like the bull thesis for Ethereum. And it kind of goes both ways in terms of, but then Ethereum kind of loses all of its market share if that's the case, right? But, like the way that I like to see it, due to my bias, is basically, it's like, it is like the home base, and it's where all of the bridges lead back to, right? And so with that being said, the topic of composability with all this, as you kind of closed up there with, is just ultimately of the utmost importance. So I'm definitely interested to hear your thoughts, kind of like on the existing layer 2 solutions that are supposed to be coming out. So Arbitrum, Optimism, right? And then we currently have Polygon and Phantom, right? So I'm just kind of curious what you think about like the current extent of adoption with these. Specifically with Polygon and Solana and Phantom, and then kind of what you're expecting from Arbitrum and Optimism, and then I'd like to kind of get to some predictions about gas prices after we get into this a bit. So, kind of, what do you think about the current adoption of L2 on Polygon, on Solana, on Phantom, and then what are you expecting from Arbitrum and Optimism in terms of adoption and composability for DeFi?
Yeah, so I might actually start with the stuff about rollups, actually, because I have some comments to add there. I think that optimistic rollups, I don't think are going to make it long term. I think everything will probably converge to a ZK rollup. ZK is pretty much superior in every single way. And this, Vitalik went into a blog post about this, right? So the way that Optimism works is that you have a bunch of transactions which happen in this thing called a rollup, and then you publish it to the L1 chain or the main chain, and then you have a week period there for anyone to dispute it. So you're basically hoping you're hoping that if somebody did something bad, like tried to scam or some way within the rollup, it will be noticed and disputed, and that can be resolved before the money is actually allowed to be withdrawn to the L1 chain, and it's out there, and you can take your money. So basically, there's a 1 week period to withdraw money from an optimistic rollup. Now, there are some solutions which are looking to reduce that via different proxies and middlemen, but ultimately the security of the optimistic rollup is just hoping that people come along and are reading things and can dispute something, which I think is it's a solution to scalability, but it's not really that great compared with, say, a ZK rollup, where you actually know that everything is consistent at the time of publishing the proof to the blockchain. And I think that itself is a fundamentally better model. So it means that you can get in and out of a ZK rollup without a 1 week lead time. You can just go in and out. It's just a transaction. You see that with Loopring. So I think that's great. But the problem is that Optimism seems a little bit more composable, at least at the current stages. But you have things like, I think, Aztec Protocol, ZK Sync, a couple of these other projects which are trying to make ZK rollups a lot more composable, using Solidity or some other language. Often the ZK rollups are done in some other language or compiler. So yeah, just making them easier to be composable as a ZK rollup, I think, is where the future is going to be at. And then everyone will just be on a ZK. Whether they'll be on one or whether all of the ZKs will talk to each other, don't know. But I think it will probably tend towards a ZK rollup. Okay, and then once you've got that, it's like, okay, well, what about these other side chains? So yeah, it might be Polygon or XDAI or something. Like I said in previously, like we looked at side chains. We built a DCA contract on them. But the thing is, a side chain is not a main chain. The side chain is an alternate blockchain. It derives its security, its underlying security, via a different set of nodes and validators. So it can't really be construed as to being the same as a rollup. A rollup derives its security from the validators that are on the main chain. So I would say that a side chain I put in the same basket as like another L1. Sure, maybe it's easier to bridge, but ultimately it's kind of the same thing, right? So you're still going over a bridge. Your network security is defined by a different way that's not the same as the main chain. So it's kind of a different thing. So I don't think the side chains have too much longevity, in my opinion. I think either L1s will get massively more scalable, and then nobody needs a side chain, or people will find solutions for L2s to talk to each other better. In both circumstances, you don't need side chains. So then you've got things like Solana and BSC and these other guys. Like I said before, like they're going to continue to grow. They're going to continue to get more retail, customers in just because of the cheap fees right now. That's going to enhance a lot of, it's going to bring a lot of traction. It already is. There's still billions flowing into these chains. They are pushed by big companies who are looking to use them for various reasons. In the case of Solana, 𝗏𝗏𝗏 is the market maker on all of these different markets, or one of the market makers, right? Anyone can be a market maker, but 𝗏𝗏𝗏 has a bunch of money basically market making there. So that is good for liquidity, and I think that people will follow the money. If the money is there, then that's where capital will flow. If you have the greatest invention in the world, but there's no money, there's no ecosystem or anything, nobody cares, and I don't think anyone will care. So I think solving the liquidity problem has been, that's why we have thousands of different blockchains that claim to do all sorts of cool stuff. But people only really care about like 3 or 4 in the DeFi world, and not the thousands, right? And it's because none of these other chains have the traction, the liquidity, and the community. So I think, yeah, it's up to these other L1s to prove that that they can continue to attract new users, continue to compete, and like the medieval cities, like. What happens is that the playing field is leveled, and then everyone just has to compete on their merits, and then the best person will win. Everyone will win, but some might win more than others. So yeah, I think that's what we'll see, and it's basically just going to be bullish for DeFi anyway. And you see some DeFi protocols like 𝗏𝗏𝗏, which they're not like 𝗏𝗏𝗏's already on 5 different protocols at the moment, or maybe even more now. I haven't kept up, but they certainly see that their dApp is bigger than just Ethereum. And I think that you'll see these other protocols going, hey, there's a wide world out there. Why don't we get a piece of that other world and make our dApp cross-chain, use a bridge, whatever it might be, to bring whatever they're doing to more people. And I think that's great.
Yeah. And ultimately, like you said, to allow those dApps to traverse different worlds, different L1s, there needs to be more interoperability, and I think we're seeing that start to kind of evolve. Very very soon we should see direct fiat to L2 on ramps. That's something that DGate is working on and Polygon is working on, and I think that is going to be a pretty significant stimulus to retail, that they now have an on ramp directly to L2, that they don't ever have to get onto L1 and pay those high gas fees. The other thing is bridges between different layer twos. I think the composability there is going to allow even more experienced farmers and DeFi investors to kind of navigate between different worlds while still staying on L2. Because even if someone is more experienced, kind of going back and forth between different bridges can get time consuming and gas consuming. So as we see more interoperability between fiat, custody, and DeFi, in addition to composability between different L2s, that is really going to scale the entire ecosystem quite a bit. And I think we'll be able to see kind of at the not quite the max of demand being satisfied, but I think we're certainly on our way there to fulfilling a lot more of the demand that's out there.
Yeah, and with that said, as far as the demand goes, clearly it's outweighing any sort of block space that Ethereum has currently. Just by means of gas price right now is like 330, and prices aren't even that volatile. They're in a decent little range right here. George, I'm curious what you think the average gas prices are going to be on Ethereum, in say August or September.
That's a good question. I think that until Ethereum 2 is deployed, you're still going to see really high gas fees, maybe in the 100 to 300 𝗀 range, as an average. Sure, these L2s will come along, but I don't know. I don't see them picking up hugely in the short term. It'll take some time. So I think gas fees are going to be with us for a while, and that's just a drag on Ethereum development right now. Like, we tried to build our product on Ethereum. The DCA contract literally couldn't be done. $180 per transaction for 6 users at an ETH price that's a third of what it is currently. Like, it's not viable, right? So you have to have some sort of other solution, and they will come. But I just think it's going to take some time. So we might be talking like a year from now, or maybe even longer, until it's really down to a level where everything can scale really well on Ethereum and it nice and juicy.
Yeah, it makes sense. It's going to be a while. It's just such a, it is a drag. It makes you just kind of wonder what could be with it. Honestly, it makes me want to stick around in DeFi for long, because if we could have DeFi right now, like without the gas, but with the level of network security that Ethereum and Bitcoin bring, like, oh my goodness, man, like, wow, like that would be something to freaking, to fight for. But right now it's like these gas fees just turn everybody away. And it's something that the retail doesn't like. So I guess, guys, check out Solana, check out, other side chains, if you're getting into it. And George, it's been an absolute pleasure. Rob, do you have any closing thoughts?
Man, I think we covered so much. I really enjoy when these conversations kind of steer their way towards more of the philosophical route, because we can always kind of tie it back to the more practical conversation on which farms are going well, and kind of the technicalities of how different DeFi mechanisms work. But I think really more valuable information is understanding the different narratives at play, the different perspectives that people have in the market, and generally the philosophy that comes with crypto and DeFi. To me, provides a lot more value in a investing standpoint, as well as just like a community member of DeFi and crypto. So yeah, that's really my closing thoughts. I don't really have any more questions. I really appreciate you coming on, George.
Oh, thanks so much, guys. It was great fun. I think, yeah, to really understand crypto, there's a couple of things that you've got to do. Number one, you've got to understand the philosophy behind it. Why people do the things they do. Why is this important? How does it compare? What are the questions and the problems that are being solved here? Really think about the philosophy behind it. But also you've got to think of, are you a trader or are you an investor? They're two different things. And I think that if you can identify the narratives and formulate a thesis on what you think the future is going to look like, that's more like an investor. And that's someone that's, not looking for the next, pump or whatever. It's more sort of, okay, I have a thesis, I'm going to follow it through. And yeah, I think that's probably a good way to be at the moment. But yeah, it's been a great discussion, guys.
Thanks a lot for coming on, George. And I'm sure we'll stay in touch. Appreciate the time, and let's keep crushing it, brother.